All right, let's talk about scalping and how we can do this to be able to grow a small account in 2024. So many people struggle with taking, maybe they're limited to the amount of funds they're able to trade with. Maybe some trade with prop firms. Again, maybe you're trading with your own capital and you're just struggling trying to find a way to grow that account. Well, first and foremost, you always need to know, you have to master and understand the core concepts of trading, which to me, number one is you have to identify the direction of the market, and no better way than to grasp market structure. Now, I'm going to stop right there because market structure, it's not the holy grail, but it is the king, okay, along with price action, in order for you to be able to understand the direction of the market and how to trade it, okay? Should you be trading going up or should you be trading going down? But today I'm going to share with you the strategy and how I trade on a daily basis, simply using a higher base chart with a lower base chart, using paired charts, and how I give the full rundown or the scale down approach to trading. I'm going to give you so pay close attention, get your pen and pad. I'm going to give you the strategy, okay? You can back test it and try it on your own, but you're going to have an open mind to this, all right? It's all about scalping, okay, and taking things to the next level when it comes to taking a small account and allowing it to be able to grow. Now, lots of people think that they want to get into trading and become a millionaire overnight. That's not how this system or process or business works. You have to build compound. It's just like putting your money into an account, an investment account, a savings account, whatever it is that yields a high interest rate or has a high interest rate, okay? You want to see it compound over time. You want to see it grow. You want to be able to watch that small account end up, multiplying over time. So let's talk about it right now. I'm going to jump into things, but what we need to focus in on are supply and demand zones. That's what I trade. Now, if you're someone that doesn't trade supply and demand and has no idea what supply and demand is, I recommend kind of going back maybe through some of the videos, doing a quick query or search, type in supply and demand. There will be many videos that'll pop up surrounding the topic of supply and demand, or you can simply go somewhere else and kind of learn it on your own. But basically, supply and demand is just aggressive buying and aggressive selling. We're going to take a look at a couple zones, all right? And like, say, for example, today, I'm going to show you a beautiful trade setup that unfolded right around here, which was a demand, okay? Demand zone. We had aggressive buying. All right, we're going to take that zone and we're going to break things down so you can grasp an understanding about the strategy and how I trade it, okay? But first we need to identify what is a demand zone, all right? These are areas, like I said, where aggressive buying has taken place at. Now, you must understand as retail traders that we don't drive the markets, but we can pay close attention to understanding how the banks and institutions are moving by looking at their footsteps, looking at the footprints in which they leave behind. This is an aggressive area of buying right here. So it's a demand area. But what I like to see always, and when I'm looking for either a demand or supply area, was there a break of structure, either to the upside or downside? And clearly speaking, you can see that it was a break of structure above these highs right here, leaving behind this area of demand right here, and there was a small area of demand right here. Now, you heard me talk about in yesterday's video and in a few videos too, also talking about liquidity. You have to understand that because there are traps that are being set up by the banks and institutions to basically get you into a play, all right, or into a position so you can become liquidity and they can make more money on the back end and basically fuel themselves up to get ready to take a bigger move. All right. So again, this was a beautiful demand zone. So I'm just going to show you some examples of what demand and supply looks like. Like this is an area of supply, aggressive selling to the downside right here. All right. If we move over here, we can see that this was an aggressive area of buying right here. So I marked it as demand. The market comes back to it. Boom. It blasts off to the upside here. Okay. This is a beautiful area of supply resting right here. Why? Because if you pay close attention, what do we get right here? A break of structure to the downside. Remember what I said. Break of structures are is what I need to see. Okay. It's very important for me to be able to see an area where the market has broke structure either to the upside or downside. If we're breaking to the downside, then you must pay close attention to, are there areas of supply? Okay, there's an area of supply here and one here. Again, liquidity. This right here, if you got into this sell, I mentioned this yesterday, right here, you became liquidity. Now, you may have picked up a few points before the market ran to the upside, stopped you out, just to test a higher area. They love to set up or create these traps within the market where you have a breaker structure, where you have a nice swing to the downside, where you have maybe multiple supply or demand zones, okay? Supply here, supply here. Which one makes more sense to take the trade at? If this is a small leg to the downside where we had an area where the market broke structure, I would be more interested, like I always talk about, taking a trade at the origination point where the move started from. If the bank started selling here, or the institution started selling here and filling orders, would it make more sense for them to finish filling orders when the market get back to this area or right here? Right here. If you mark this off, I don't trade fibs, but if you mark this off with a fib, somewhere this could be slightly higher than the 50%, whatever the case is, but it's basically almost a halfway point of a leg or impulse move to the downside right here. So I would be interested in taking a trade back up here where the move started at versus maybe the halfway point and becoming liquidity. You took the short here. Maybe you tried to take it and thinking the market was going to run lower and break below 247. It just turned back against you, pushed back up, and you got stopped out. Maybe you had your stop resting right here at 326 or slightly above that. You got stopped out. They collected your money as well as all the other sellers that got into that trade there, and all they did was run it back up a few more points to this area here where they originally started their selling at, just to do what? Fill orders or fill the remaining portion of their orders to position the market to push lower. So you have to understand that. Again, supply and demand is just aggressive areas of selling, okay? We wait for the market to get back to those areas, all right? That was a supply area. This was aggressive buying to the upside as a demand area. So look for those things or those areas on your charts. But also pay close attention. Is the market breaking structure? All right, because that's what really helps me determine and really get into a good trade setup as well. As I mentioned right here, this was a breaker structure to the upside above these highs here. It took them out. It pulls back right here. Aggressive buying. Okay. Again, now the buying started at right here in this area here. Okay. If you take a close look here, as it was moving to the upside. Now, I'm not saying the market's always going to pull back and reject at the lower portion of a move, okay? But you've got to think logically. They love to take out at least one area of either supply or demand, okay, before they stop at the next area, which like right here, they broke through this area here to the downside, took out liquidity right there. If you try to get into a position or move to the market to push higher here, then you got stopped out as it came back. It tested the next area or level right below, and you can look for rejection to possibly get into a trade to go long. Now, when I saw this setup right here, which was a demand zone right here, I also pay close attention. I knew we had resistance right here, but there was an area of supply resting back up here as well. Now, will the market always run back up there and test that area of supply if it is one resting right above? Not always. So this is the reason why when I saw rejection right here, I was looking for, is there an imbalance in which the market could at least test one area of imbalance and then, maybe see what it's going to do from there? Yes, of course. It got here. It rejected the demand zone. We had an area of imbalance resting right here between this 1, 2, 3, third candle right here. And the market goes back up there. And that's why I took out my trade. As you saw, those that are been watching the videos, those that are part of the Discord community, you saw that I took out my trade around this area where this imbalance or gap rested at. Okay. So you must understand the market is going to fill in any areas of imbalance or gaps back either below or above. Has it finished filling back up to this upside here yet? No, it hasn't. But that doesn't mean that it's not going to, because it will. So, but anyways, I took this trade. I'm gonna break things down from a scalping perspective, because that's what I do. I'm not a position or swing style trader. I like to scalp the market, typically speaking for the NASDAQ, it could be 10 plus points. Okay. And most times, I'll pick up about 20 points, but if I can get 10 points, depending on what's resting right above, people always ask, what's your what am I trying to say here? Your risk to reward ratio, in the sense of, you looking for 1-to-1, 2-to-1, 3-to-1? It just depends on price action. You have to understand it, because you're not always going to get that 2-to-1 or 3-to-1. We hope to get that 1-to-1 at least, right? So that's what I look for in a move. Okay, if I can get 10 points at the NASDAQ, then I'm fine. Anything else is plus. Okay, but you have to pay attention to what's resting right above. Resistance, support, and areas in which the market could reject them. I saw this imbalance resting right here when the market rejected off of this area of demand right here. So I took it back up to around 364. So now let's talk about the scalping strategy and how it kind of unfolds. The first thing we need to really understand in doing so is, I always like to look at the direction of the market, but we must also understand too, just because the market may be moving in a key direction on the higher time frame, okay, because we want to take our trades in the direction of the higher time frame. If you are skilled enough and experienced enough, sometimes you can kind of take trades against the grain, okay? I don't recommend this for beginner traders, but if you are a beginner, whatever direction the higher base chart or higher time frame chart is moving, please take your trades in that direction. So if the market is moving to the downside and breaking structure, and you marking zones off of a higher base chart, then make sure to take or mark areas of supply if it's moving to the downside. Wait for the market to retrace back and move back to the zones. Look for and then scale down. Once it taps into that higher base, a higher time frame zone, scale down to a lower time frame chart. This is where the multi-chart or multi-confluence using a basis of using charts together. Like I use my 60 range, my 12 range is my entry chart. I'm going to show you how this trade worked out, using the 12 range chart where I take my trades from. I mark a zone off of my higher base chart right here because we have a demand zone, but I'm not taking my trade specifically off of the higher base chart. I like to move down to a lower base chart to get into a more precise entry point. I'm going to show you how I do this and how I can end up scalping the market for several points by using my 12 range chart. Once we retrace back to, in this case here, we got the breaker structure, pull back to a key area of demand off of the higher base chart. Okay, we broke structure to the upside. Okay, which means that if you take a look here, okay, we started taking out some minor area. We moved lower. We started taking out some minor area structure right here where we left behind a key area of demand. So I'm interested in looking for long, scalping long if the market comes back here. Now let's move down to my 12 range chart where all the magic, the remaining portion of the strategy takes place when it comes to the rejection and confirmation, which shows me or gives me the, okay, let's get into the trade. Now, before we break down and move over to the 12 range chart, I'm just going to show you this trade on the Discord because I posted it. And before I do this, if you're interested in joining the Discord, please do yourself a favor. Scroll down to the down below in the description portion of this video. You're going to see two links. The first one is to become a Discord member. It's free. Click on it. You can come over and join our community. Okay, we are future traders. Most of us trade the indices, but if you trade, other markets tied to the future markets, currencies, commodities, whatever it may be, you're still invited because this is a futures community where we trade futures. All right, so you can come over. There's a channel on the server titled Trading Floor. This is where traders come together and we share our trades, post them, screenshots, whatever the case is, so that other traders that are part of the community can see the trades and question, or well, not really question, but ask questions if they have about, a trade. I trade supply and demand. So if someone wants to ask me, hey, Mike, why did you take that trade? I can break things down. I'll let them know, hey, there was a demand zone off the higher time frame. Here it is off the lower time frame. This is the purpose and the reason why I took that trade. Okay. It is a community where traders like-minded who trade futures can come together and help one another. Understand that. There's also a general chat channel on there to if you have questions about the future markets, please forget the background noise. You can come over and ask questions as well. Maybe you're a newbie. Maybe you're someone that's coming over from options or futures, all right? I mean, not futures, but Forex, okay? Sorry about that. But yeah, come over and you can join us. Now, I'll also have, if you find down right below that link in the description portion of the video, you'll see where it says become a elite member. because people always ask me this, and this is the reason why I talk about it as well. You can become an elite member for $6.99. That's all it is a month. It's a very minimal fee. But you may be asking, what do you receive? You receive my trade breakdowns. That's where I go into detail as if you were sitting right next to me. And it helps so many traders out who are part of the community. And they have found success by becoming an elite member, because the more they spend time watching the breakdown, the trade breakdown videos, the more it becomes clear. They understand the strategy more and more. It's like where we have to practice and practice and practice things till we become perfect at doing it. That is the reason why I do the trade breakdowns for that private community who want to, join that tier program through YouTube and become an elite member. If you're interested in becoming an elite member and receiving the trade breakdowns as well as the video playlist, all that is where I hand select it. I pulled out a group of videos that I feel cover the most important portions of or content of what I have to talk about, discuss surrounding the trade, the strategy and how I trade, as well as important topics. I picked them out, I linked them up so that you have access, so you don't have to watch over 700 videos, okay? I push out a lot of content because I want to see people become profitable and consistent. But if you're interested in becoming an elite member, all you have to do, right down in the description portion of the video, you'll see a link that says become an elite member. Click on it. 2 tiers will pop up. Choose the one that says elite channel supporter or elite channel member for $6.99 a month. That's all it is. It's not $699, $6.99. And you can watch, there's a slew of trade breakdowns on there. You spend time watching because I go into detail about the trades. I talk about the reason why I took the trade, leading up to the trade, talk about while I'm in the trade, what I'm seeing, why I took it, as well as stop loss, placement, and profit target, things of that nature like that. So you can get an understanding, because a lot of people, they have a hard time. They can get into a trade, but they have a hard time understanding where should I place my stop at, where should I take profit at, things like that. So it's helped people, but I'm not holding anyone to it. I'm not telling you to do so or not. I'm just, if you are able to and you want to support the efforts of me as a content creator, because that's what you're doing, support my efforts of creating this beautiful content and pushing it out and sharing with you publicly, and creating the videos. But from a private standpoint, if you want the background goodies and you want to receive the trade breakdowns as well as the video playlist and the emojis and the badges and the priority reply to the comments, those are just other small little awards or perks that you receive for supporting my efforts as a content creator. You can do so, or you can click on the join button that you see in front of you. Click on that and you can invite yourself in just as well. But let's talk about this now, the scalping technique, the method, and the magic behind using the 12 range chart so that you can grow your small account. If you're taking trades from a higher base chart, then you may have to weather a little bit more storm, because the market, the higher you move up, the higher that you move up on a chart and you get into a trade, the market's going to have pushes and pulls, even within a big candle. You must understand that. So this is the reason why I start scaling down and looking at things from a higher base to a lower base chart. Once I've marked it off my higher base chart, the zone, so I can get into a more precise entry point. So let's cover a trade right now that I took, into today's session and posted it just quickly over on the Discord community. All right. So take a look here. Let's let me see here. My chart is doing something funny here. Okay, here. Sorry about that. All right. So we now see that this was a demand zone, aggressive buying. Move down to the 12 range chart. What we see here, let me do this first of all, because this helps people right here by putting this zone here off the higher base where it comes over, and you can see it on the lower base chart as well. All right, so we see the zone here, right? We see the zone. The market taps into it in this area right here. All right. Once it moves into the higher base zone, and taps into it as it did, you can see it came down, tapped into it right here. What I look for then, I just move down to my lower time frame, and I'm looking for a breaker structure to occur, to where there's a beautiful demand zone being created. So it's just as we did before, marking the demand zone off the higher base chart, and then marking it off, or looking for one to be created, and you look for basically a breaker structure, and we're looking for a demand zone to be created on a lower base chart. That's all it is. So once we get that, then we wait for the market to pull back to it to see if it's going to reject it. Boom, take our shot going long. Same thing if we're going short, it's just in reverse. All right. So the market moves up here, it pulls back, it breaks structure to the upside right here. And maybe you waited for this pullback right here. Now, what I didn't, well, I'm not gonna say I didn't like, maybe you got into the trade right here and maybe it kind of spooked you out a little bit because maybe you wait for the market to come back and got into this trade right here at this demand zone right here. All right, right here. So let's mark it up right quick. Okay, because there was another opportunity. You could have gotten the trade too. It gave you a second chance. The market comes down here, it rejects, and it pushes up higher, right? But then it starts to come back. This is where you have to, a lot of people question, okay, should I get out the trade because I'm up already? Maybe you got into the trade right here at 342. It pushes all the way up to 360. You pick yourself up 18 points there, and then it starts to come back. It depends on you. You know, you have to know and feel comfortable in the way that you trade. Typically, when the market, if it starts to come back multiple candles, 2 or 3 candles, then I'll get out the trade to lock in, or to get out the trade and secure my profit. But I try my best to move or my stop once I put it in place up as the market is moving to the upside. So each time we get a breaker structure and it creates a new higher low, I like to move that stop loss up to that last higher low position. Okay, so the market runs to the upside here. All right, maybe you got in right here. I didn't get in down here, and I was really late on the trade in a sense, but I was more so waiting to see how the market was going to play out, because when it got into this area here, it was kind of just moving sideways, if you can see here on a lower time frame chart or lower base chart. But it broke structure again to the upside. It pulls back. We have a beautiful demand zone resting right here, and I really like this because we had multiple candles right here to the upside, showing me that there was a lot of buying opportunity or momentum push to the upside here. It comes back. So when it came back here, basically what I like to do is just wait for, what I do is I wait for a break and close of a candle above the last down bearish candles. This is if we're going long. So the break of the candle would have been right here at 346, at 346. Okay, you get to the trade. Does it come back? Yes, it does. But would it have ever stopped you out right here? It would have scared you a little bit, of course. But remember what I talk about, and I say to put your stop, this will be at an area of supporting swing. So if this right here was the demand zone off of the 12 range, the lower base chart, again, we're looking to get into a trade at a more precise entry point by using a lower base or lower time frame chart. Then this was a demand zone. It rejects. We get the break and close of the candle. You're going to put your stop not tick to tick. I don't put my stop tick to tick. I give it a few points breathing room. Maybe it was going to be somewhere in this area right here. I'm into the trade around 346, say, for example, right here. Now, I didn't get to the trade until right around this area. I believe it was in this area right here, because I was waiting to clearly see, was this thing going to reject or not. But if you got into the trade right here and it comes back and your break-even point was right here at 346, it runs all the way down to 341, but it never came back and stopped you out if you put your stop below this area here. Okay, it kept, and then it moved to the upside, blast to the upside. So I got into the trade late, like I said, because I was waiting for just a little bit more confirmation, because it started seesawing right here. But again, I always talk about the break and close of the candle, get into a trade, stop goes below the area from which the market rejected, okay, which we can treat as a supporting area, rejected the demand zone, and where we got the break and close of the candle at, below this area right here. All right, so if you got in 346 and you were able to hold up to that 364 area, okay, and it goes up to really 368 or 369, you could pick yourself up 20 points really, really easy there, okay? Again, I was aiming for that imbalanced area right here, the first area of imbalance, to see it, and then see what the market was going to do at that area there. Of course, it reached up there because it's tapped into this area of resistance. Okay, so it ran up to the area of imbalance, and then it pushed to the downside here. Now, there was, again, supply right here, and it could have tested that area there, but they decided, for whatever reason, to continue pushing the market lower. So when it did that right there, then we got a breaker structure below this area here at 334. Sorry about that. And then it just continues running lower. Now, and that's how I trade each and every day, is looking for opportunities, to at least grab 10 quick points off the NASDAQ. Okay, that's the NASDAQ 100 futures. All right. I also trade the ES, and I posted a beautiful ES trade that I took this morning, and I think I scalped it up for like oh, that was my big trade for today. Oh, that was really the good trade for today. Around 15 points, I believe it was, on the ES. But the ES has been moving really slow, and you could find some great opportunities, even pre-session or pre-market to trade. So, and that's the trade I took, was pre-session or pre-market, and I kind of held it through. But what I'm trying to say here is that on the ES futures, okay, or the micro ES or the micro NASDAQ, whatever it may be. What I'm trying to say is with the ES in specific, it's been moving really slow. It's not had it's had some good areas to trade or zones to trade. You just had to kind of market zones and then, kind of keep coming back and forth between your charts over time to see, hey, did it tap this zone yet or not? But I did find a beautiful trade that I took on the ES today, and it allowed me to pick up 15 points there. So I just took that one trade on the ES, and then took a quick scalp on the NASDAQ as well. But you have to look for things like this. If you can pick up 10 points, on one trade on NASDAQ and maybe take one more trade, okay? I wouldn't take no more than probably 3 trades. Limit the number of trades that you're going to take, because the more you start trading, taking 5, 6, 7, 8, 9, 10 trades, the more risk you're putting on. Every time you enter the market, every single time you do so, you are increasing the risk factor of you possibly, taking a loss, all right? Okay, or losing something, all right? So the key to being successful, the key to growing an account is to limit the number of trades you're taking and learn how to allow your trades to basically run, okay? In the end of things, people always talk about this. I can trade, but I don't know how to hold my trades. That comes with experience, and when you get to that level and are able to do that, you'll start to see your profits will increase as well. And the emotional side or psychology, you start to solve a lot of your psychology issues as well when it comes to fear, getting nervous, having a means of anxiety, because every time you enter the market, you feel as if, is this going to work out? Is it not going to work out? So by doing so and limiting the number of trades, it allows you to be able to grow an account quicker, a small account quicker, but it also helps you eliminate the fear factor as well. One good trade a day. That's why I took one nice trade on the ES. I saw unfolding. I waited for it over a period of time. I saw it unfolding, and then I took a little scalp on the NASDAQ, and I'm done. Okay, that's all I need. Okay, but hopefully this video really resonates and it touches home on basis with a lot of traders that are watching today, especially those that trade futures. But if you're not a current subscriber, I would highly recommend you spending some time watching the videos on the channel. We'll love to gain you as a sub today by simply clicking on the subscribe button today. What do you have to lose? There's lots of valuable content here. Spend some time on pen and pad and taking good valuable notes for yourself. But become a subscriber by clicking on the sub button. Make sure to turn on all your post notifications, okay? So you never miss one of the uploads. And last but not least, if you found value in today's video, please drop a like on the video. I really appreciate it. Again, if you want to become a Discord member, it's free. The link is down below. If you want to become an elite member, the link is down below in the description safe of the video. Take care. Have a safe trading day, and I'll see you in the next one.